Subscribe to our channel, like and share our videos. Press the bell icon for new video notifications. The product and other highlights are given here. Unveiled 21 new commercial vehicles across all segments. Chip supply starting to improve. Wholesale up 8%. Range Rover wins What Car Reader's Choice Award. Two other models also win awards. This is output or the results of Jaguar and Rover Automotive PLC. EBIT and cash flow positive in Q3, revenue up quarter-on-quarter, lower break-even, profit before tax 9 million pounds, up 203 million pounds versus Q2. These are the results for Jaguar and Land Rover. Highlights of Q3 FY22 performance: volume and revenue. Volumes remain constrained by semiconductor supply. Wholesale rose by 8% compared to the prior quarter of 69,000 units. Strong mix in particular Range Rover family and China market up versus prior quarter. Launch of the new Range Rover in Q3 supported further order book growth to 155,000 units. Profitability has improved, EBIT turned positive to 1.4%, reflecting increased wholesales, mix optimization, and cost efficiency. Refocus delivered 400 million pound of profit. Free cash flows of 164 million pounds in the quarter. Quarter 3 break-even at 70,000 units. Total cash 4.5 billion pounds and liquidity of 6.5 billion pounds as of 31st December 2021. Reflects positive cash profits after tax, net of investment, working capital slightly negative. Favorable mix with Range Rover wholesale up 30%. Electrified sales now 69% of the total. This is the picture of sales for Jaguar and Land Rover. Semiconductor supply and outlook: gradual improvement seen in quarter 3, expected to continue through 2022. Production volume has decreased due to shortage of slip semiconductor. Chips supply started to improve in Q3, reflecting chip production impacted by COVID or other specific events in Q2, coming back online. Proactive engagement with suppliers and chip manufacturers to secure more supplies. Chip shortage likely to continue in 2022. JLR engaging in strategic discussion with top tier 1 component suppliers and chip producers to secure long-term supply agreements for future product programs to minimize future supply risks. Order bank of 155,000 units, up 30,000 units for new Range Rover. Deliveries of new Range Rover to start in Q4 of FY22. Refocus ahead of schedule, target increased by 400 million pounds to 1.4 billion pounds. Market performance has improved, costs have been under control. There has been digital transformation and additional investment of 100 million pounds, savings of quarter 3, 300 million pounds year to date. FY22 investment target revised to 2.2 billion pounds. This is the performance overlook of Tata Motors India, the standalone. Volume and revenue. Revenue up 43%, sequential recovery continues. Commercial vehicles strong year-on-year growth led by recovery in SCVs. All product lines gain share in FY22. Passenger vehicles 44% growth and market share momentum continues. Electronic vehicles highest ever quarterly sales at 5,556 units. Profitability has gone up, EBITDA is up 3.3%. Commodity inflation dents margin despite strong revenue growth. Commercial vehicles EBITDA 2.6%, adversely impacted due to commodity inflation. Passenger vehicle EBITDA up at 4.2%. Subsidiarization related to one-off costs impact by margin 200 points. Free cash flows post interest 2.0 thousand crores. Strong operational cash flows funds capex and working capital restoration continues. Strong liquidity is visible at 6.4 thousand crores. The investment is approximately 0.9 thousand crores. Capex stepped up further to drive growth. Q3 FY22 Tata Motors standalone India at 873 crores. Total spending expected is 547 crores. Capital and other investment 273 crores. Total R&D 274 crores. Expended R&D is 234. Capitalized R&D is 37 crores. Business update on commercial vehicles. Key highlights. Sales up 15.3%. Gained market share across all segments. FY22 growth versus FY21 growth up 300 basis points. Increased vehicle prices and continued efforts on cost reduction to reduce inflation impact. Simultaneous launch of 21 new products in third quarter. Debottlenecking semiconductors and CNG component supply improved availability. Demand for CNG powered trucks continued to rise. The bright spots include truckers' sentiments index improved further with increasing fleet utilization levels and high freight rates. Gradual demand recovery continued across most segments. Sustained the improvement trend in service and spares penetration. Operationalized 60 electric buses at Ahmedabad. Cumulative kms covered reached 25.5 million kms across all cities with an uptime above 95%. The challenges ahead include commodity inflation impacting margins, comprehensive improvement plan deployed, uncertainty in demand in immediate term due to COVID third wave, vehicle financing impact of change of NPA provisionings, demand remains sluggish for buses and vans, further impacted due to Omicron wave, semiconductor availability still below requirement in some models under monitoring. Electronic vehicle industry continues to grow exponentially by Tata Motors Limited. A positive word of mouth from existing customers, increase in public charging availability and home charging awareness, additional demand incentive from states like Maharashtra and Gujarat, launch of new EVs with better value proposition, revival of fleet demand, rising ICE vehicle prices, increasing fuel costs, improvement in supply of EVs. Business update, key highlights, industry wholesale degrew by 15% year on year. SUV share increased to 40% with new launches. The bright spot, wholesale is projected to increase in Q4. Semiconductor supply is likely to normalize in Q2 and Q3. Semiconductors situation will improve. Third wave of COVID has not impacted much because it has failed to grow rapidly. Looking ahead, Tata Motors believes that demand remains strong despite near-term concerns. Supply situation gradually improving, inflation worries persist. Performance to improve further in Q4 FY22 and beyond. Jaguar Land Rover actions continue to debottleneck, continue to execute a reimagining strategy, executive refocus program, achieve positive EBITDA. Tata Motors in commercial vehicles continue to grow market share across segments and restore margins as commodity inflation stabilizes. Personal vehicle accelerates sales further while improving profitability. Electronic vehicles complete CPs for Helios and Drawdown Tranche 1 achieve positive EBIT margin and positive cash flows in Q4 of FY22. The returns of the scrip in the last 3 years is 226%. In the last 1 year, the scrip has given a gain of 53%. Last 6 months, the scrip has gone up by 68%, a gain of 203 rupees. In the last 1 week and 1 month, 3 months, the share has been trading in the negative zone. Promoters holding is 46%. We have banks and FIs 0.5%, FIs 14.57, insurance for 6.26, mutual funds 6.52, public is 15%, and others are 9.66%. FIs holding continue to have a strong presence with more than 15% in December quarter. Mutual funds continue to have a 7% stake. Tata Motors is a buy at declines. The company is a leading player in passenger vehicles, commercial vehicles. Promoters hold 46%. FIs and mutual funds have a good holding. The script is for long-term investors, very good speculative, trying to get a support around 470 levels. The script has a year high of 536 and a low of 268. Best buy around 470 levels for target price of 600 for a holding period of 1 year. Long-term investors with 5-year horizons can get decent returns on their investment. Thanks for watching video brought to you by SmartInvestor. Click on the bell icon to get